Welcome back to Investing Talk Podcast. Today, we're tackling a question that seems to be on a lot of minds. Is NexGen Energy a good time to buy right now? It's a really fascinating company, operates in that crucial uranium sector, and, well, we know many of you are watching it closely. Before we dive in, could you do us a quick favor? Subscribe, like, and definitely comment. We genuinely love hearing from you, seeing what you're thinking. Oh, and if there's a specific company you want us to look into next time, just drop it in the comments below. Okay, so we've done our homework. We've gathered a whole load of source material for this analysis. We're dissecting NexGen Energy from, well, pretty much every angle: financials, market position, stock performance, what's coming up. Our goal today, help you cut through all the noise and hopefully make a really informed decision.
That's exactly right. We're going to break down the, let's say, complex picture of NexGen Energy, moving beyond just the headlines, Understand its real potential, but also its challenges. And we'll help you connect the company specifics to the bigger picture, what's happening in the uranium market globally.
Okay, let's unpack this then. For our listeners, at its core, what exactly is NexGen Energy? What's the big picture they're aiming for?
Right. So NexGen Energy is primarily an exploration and development stage uranium company. Their star player, if you will, is the Rook-I project. That's up in Saskatchewan, Canada. Now, what makes Rook-I so significant? Well, it's one of the world's largest undeveloped high-grade uranium assets. And what's really insightful here is that it's not just large. Its exceptionally high-grade nature is key. In mining, high-grade. Well, that potentially means lower operating costs per pound, stronger margins once they actually start producing. It fundamentally de-risks future output if, and it's a big if, they can bring it online. And this project is situated right in the Athabasca Basin, highly prospective. That region is basically synonymous globally with the world's highest grade uranium deposits. So it's not just that there's uranium there, it's the concentration and, well, the potential accessibility that makes it such a strategic asset.
Right, a cornerstone asset. Definitely sounds like it. Now, when I first looked at NexGen's financials, well, a few things jumped out. They seemed quite different from, a typical publicly traded company. Yeah. For listeners seeing these numbers maybe for the first time, what are those unique bits and how should we interpret them?
Yeah, you're right to flag that. Currently, NexGen Energy reports, well, basically no material revenue. And that's because, as we said, exploration and development stage, they're pre-production. They're focused on building the mine, not actually digging up and selling uranium yet. So as a direct result, it has negative net income. The last 12 months showed a net loss of about CAD 142 million. And negative EPS, earnings per share, that's minus 142 FAD, and naturally profit margins. Also negative. Now, this isn't necessarily a red flag in itself. It's actually quite typical for pre-revenue mining firms. They're heavily investing in future operations, essentially burning cash now to build something valuable down the line.
Okay, so given those numbers and the fact they're spending without revenue coming in, what does this really mean for its immediate financial health? Sounds like a big outflow.
Precisely. It means the company isn't cash flow positive. Not at all. It relies heavily on external capital markets for funding the project. There's an ongoing cash burn. And actually, continued losses are forecast as it moves towards construction. And dividends, no, not even on the table. It's like building a skyscraper, right? Yeah. You pour billions in before you rent out even one floor. However, it's critical to put this in context. NexGen has a significant market cap, about USD 4.23 billion. That valuation isn't about current profits because there aren't any. It's really the market's anticipation. It's the life in the future potential. It's a bet on what's coming, priced in today.
That makes a lot of sense, yeah. Especially for a company at this specific stage. So given that financial picture, how does NexGen actually differentiate itself? It's a tough industry, very capital intensive. Where do they sit in the pecking order?
Well, what's truly compelling here, I think, is that NexGen is positioned among the leading advanced stage uranium developers in Canada. Its 100% owned Rook-I project gives it immense competitive strength. It's not just the large high-grade resource, but also its location, a top-tier uranium jurisdiction. That really makes it stand out. The project also boasts very positive feasibility results, significant mine life potential. I mean, it could produce for decades. All these factors put NexGen squarely in a position to benefit, potentially substantially, from that growing global demand for nuclear power.
Right, which we're definitely seeing pick up.
Exactly. There's a strong resurgence happening.
That sounds like a formidable position for sure. But, an industry with such high barriers, long development times, there must be a flip side. What are some of the potential hurdles or competitive threats it faces trying to get Rook-I online?
Absolutely. There's always a flip side. The development process itself is incredibly capital intensive. We're talking billions of dollars, requires substantial investment, and you're enduring long permitting and construction cycles. These can stretch for years, maybe even a decade. So yeah, not exactly a weekend project.
Not at all.
And NexGen faces competition too, not just from other explorers in the Athabasca Basin, which is highly sought after fate, but also from the big global uranium majors, companies with established operations, deep pockets. Plus, you have inherent operating risks. Securing all the permits, that's lengthy, complex, successfully financing this massive project, and of course, the ever-present volatility of the uranium price itself.
Wow. Okay, so quite a few significant factors adding layers of risk.
Definitely. It's not a straightforward path.
Okay, with that background, let's switch gears a bit. Let's look at something listeners watch closely. The stock's recent performance. Here's where it gets really interesting. Let's look at the price. What's the technical picture telling us?
Right, looking at the charts, on September 5th, 2025, the stock was trading recently between, say, USD 7.26 and USD 7.48. Over the past 52 weeks, it's fluctuated quite a bit, from a low of USD 3.91 up to a high of USD 8.96. We can identify some key support levels. Looks like they're holding between about USD 6.20 and USD 7.00, and resistance levels seem to be around USD 8.80 to USD 9.00. That's where previous rallies have stalled. The overall trend since early 2024, it's been upwards, which is, generally positive, but we have seen a recent pullback from those 52-week highs. It's currently sort of consolidating near those mid-range levels, suggests maybe a period of indecision or perhaps accumulation.
It gives us a good picture of the price action itself.
Yeah.
Are there other key technical indicators, maybe trends that stand out, things we should be aware of?
Yes, certainly. The 50-day simple moving average, the SMA, is currently at USD 6.95, and the 200-day SMA is at USD 6.36. The shares are actually trading slightly above both of those key moving averages right now.
Which is generally seen as bullish, right?
Yeah.
Intermediate and longer term.
Often interpreted that way, yes, over those time frames. Its 14-day relative strength index, the RSI, that stands at 43.86. That's indicating neutral momentum. Basically, it's neither oversold nor overbought. Doesn't signal an immediate sharp move either way. One important characteristic, though, is its beta, 1.73.
Okay, what does that tell us?
Beta measures volatility relative to the market. 1.73 signifies significantly higher volatility than the broader market, which is quite typical for these junior resource equities still in development. High risk, high potential reward often means more price swings. So summing up the technicals, shares remain volatile, overall neutral momentum as of now.
That provides some crucial context for anyone looking at the charts. Okay, now, market sentiment. What's the general analyst consensus on NexGen right now?
Well, there's a remarkably strong consensus buy rating from recent analyst coverage. It's quite striking. For example, MarketBeat shows an average target of $13.16. That implies about, 25.4% upside from current levels. And all four analysts they track recommend a buy.
All four. Okay.
Yeah. And TradingView, even stronger, shows 15 strong buy ratings, 1 buy, and 0 hold or sell recommendations. That's pretty rare. StockScan even has an average analyst target way up at USD 15.18. with the high end reaching potentially USD 16.17. I mean, that implies over 100% upside from the current price.
Wow, that's ambitious.
It is. But it's worth noting, some lower forecasts do predict more modest downside risk in the near term, maybe a short-term price channel between, say, USD 5.40 and USD 8.40. So, sentiment. Overwhelmingly positive, yes. But there's still a recognition of potential near-term swings.
That's quite a range, but yeah, generally very positive.
Yeah.
What about recent activity? Anything impacting the company over the past few months? Headlines, developments driving the sentiment?
Yeah, over the past 3 months, a few notable things happened. In September 2025, just recently, Kingdom Capital Management notably increased its position. That often signals renewed institutional confidence, the big money getting more interested.
Right.
NexGen also had an interesting exploration breakthrough. They struck shallow, high-grade lithium at the Patterson Corridor East. Now, uranium is their main focus, obviously, but this adds a sort of speculative yet intriguing angle to their broader portfolio.
Interesting diversification, potentially.
Potentially. And the share price reflected strength then, rising to $7.88 on the NYSE, $10.68 on the TSX during that period. Looking back to August 2025, NexGen announced preparations for its Q2 conference call. Those always bring investor focus. You expect updates on utility contracting, progress at Rook-I. We also saw continued large trading volumes then, suggesting heightened investor attention. And assay reports for various exploration assets came out. And back in July 2025, a significant regulatory milestone. They got approval for their 2025 site program at Rook-I. That was actually back on June 12th. They also published their 2024 sustainability report, reaffirming ESG commitments. That's increasingly important for institutional investors.
Definitely. Anything on insider buying or selling, or social media buzz.
Interestingly, no recent insider transactions reported. And social sentiment seems pretty neutral. The Fear and Greed Index was at 39, which suggests, well, mild fear rather than irrational exuberance.
Okay, so if we're connecting all these dots, what are the key dates or events we should really be watching for near term, long term? What catalysts could move the needle for NexGen?
Right, catalysts. Short term, we've got several financial disclosures and market-related events coming up. September 16th, 2025, that's the Q2 2025 earnings release, key date. Then September 27th marks a holiday period, might see reduced trading. Something to note, October 7th is an ETF rebalancing event. The company's weighting in various ETFs could shift then.
That can sometimes impact price.
It can. And October 25th, institutional holdings disclosures. We'll see which big players are buying or selling. Finally, November 10th, 2025. The Q3 2025 earnings conference call. These earnings releases are crucial. Expected to detail Rook-I progress, update financials, maybe give more color on resource development, looking longer term. The main catalysts fundamentally revolve around Rook-I development, achieving critical environmental approvals, securing those all-important offtake agreements with utilities, finalizing project financing for construction. Those are the big ones.
Major de-risking events.
Exactly. Beyond the company itself, global uranium price shifts are huge. Increased nuclear reactor demand driven by energy security, decarbonization. Those are macro catalysts. And like in many resource sectors, M&A activity or strategic partnerships. Always a plausible long-term catalyst, especially with such a prized asset.
Okay, beyond those official catalysts, scheduled events, are there any whispers, rumors circulating that could influence things, even if they're just speculative? What's the chatter?
Well, there are indeed some ongoing whispers. You know how markets are. Could be catalysts if they pan out. M&A speculation persists. Suggestions that larger uranium players might be interested in acquiring NexGen makes sense given the asset quality and rising uranium value. There's also chatter about strategic partnerships, reports of discussions with global utilities, nuclear energy corporations for future offtake agreements from Rook-I.
Securing buyers early, essentially.
Right. Plus, market buzz highlights the possibility of further high-grade discoveries along that Patterson corridor. Drill results continue to impress, potentially expanding their resource base. And finally, there's speculation about Canadian government policies potentially favoring expedited uranium permitting. If true, that would certainly accelerate timelines.
A lot of moving pieces. High stakes indeed.
It really is.
Okay, that's a lot to digest. With all this upside potential, the buzz, it's easy to get carried away. But let's talk cold, hard reality, the risk side. For a long-term investor, what are the absolute critical red flags here? What must they consider?
You absolutely have to look at the risks. For a company like NexGen, there are significant stock-specific risks you just can't ignore. Primary one, development stage risk. Rook-I needs substantial financing, multi-billion-dollar stuff. And it needs to complete all environmental and regulatory permitting before construction and production can even start. Any delays, cost overruns, negative regulatory decisions, they would be absolutely material. Huge impact.
I'm financing that.
That leads to the next risk, market access and dilution risk. The company might need to issue new equity or take on more debt. Issuing equity dilutes existing shareholders. Debt might come with unfavorable terms.
Execution risk is massive.
Massive. Beyond the company itself, you've got broader market and sector risks. Commodity price volatility, uranium prices are cyclical, sensitive to global energy policy, supply shocks, that's a big one, broader macro risks too, equity market downturns, tight capital markets, that makes it harder, more expensive to raise funds. And don't forget intensifying competition. Other Athabasca developers, lower cost international producers, all vying for market share eventually.
Okay, so considering absolutely everything, the huge potential, the pre-revenue financials, the catalysts, and these very substantial risks, what's the overall take? The rating, the recommended investment horizon for NexGen Energy.
Okay, putting it all together. Based on everything we've unpacked, our overall rating for NexGen Energy lands at about 6.5 out of 10. The rationale is this. It clearly boasts strong asset quality. It's strategically positioned for what many expect to be a significant uranium market recovery. You have that strong analyst support, considerable long-term potential for appreciation, However, that promising outlook is balanced against material execution risk. Its pre-revenue, still facing ongoing losses, requires immense capital. Investors absolutely must be able to withstand that inherent volatility and uncertainty.
So 6.5 reflects that balance. What about the time frame?
Right. Given the high price volatility, the wide range of analyst expectations from huge upside to near-term downside risk, the risk-reward, is really skewed towards the long term. Therefore, this company seems best suited for long-term investment. Short-term trading seems very high risk. Recent choppiness, volatile sentiment, lack of truly impending positive near-term catalysts that fundamentally change its production profile. But long-term investors, those seeking uranium exposure who have a high tolerance for this kind of development stage risk, they might find an attractive risk-reward here. But it's really contingent on successful project de-risking and, of course, a sustained sector recovery.
That's a very clear summary. Outlines both the, frankly, incredible opportunity and the very real hurdles. So, to reiterate for everyone listening, NexGen Energy offers significant long-term potential, yes. Growing sector. But it comes with considerable development and market risks. It really sounds like an investment for those with patience, a long-term view, and a strong belief in nuclear power's future.
And, this raises an important question, maybe something for listeners to ponder. In a world increasingly focused on energy security, on decarbonization, how quickly and really to what extent will the market truly value this kind of future potential over present-day profitability for companies like NexGen Energy? It's really a bet on tomorrow being made today.
A great question to ponder indeed. Well, thank you for joining us for this exploration of NexGen. We hope this has given you a clearer picture. Don't forget to subscribe, like, and comment on the show. And please do let us know which company you'd like us to look into next. Until then, happy investing.